Hi guys, Alex here. This is the Financial Pickle, and today we're looking at why Tether, which is a stablecoin, is considered a Ponzi scheme, how it is related to Bitcoin, and how all of this is related to the traditional banking system. Exciting stuff awaits. Let's find out. Now let's start by looking at what Tether is. Tether is a cryptocurrency going by the name USDT, Tether, and it is a stablecoin. A stablecoin is a cryptocurrency that doesn't fluctuate in value, which means unlike Bitcoin, Ethereum, Dogecoin, Cardano, whatever you want, which can fluctuate as much as 30% in one day, USDT or Tether or a stablecoin should stay exactly the same value all the time. In case of Tether, it is linked or pegged to US dollar, which means 1 USDT or 1 Tether equals exactly 1 US dollar, which sounds fantastic, not accounting for obviously very minor fluctuations for a very short period of time. In theory, that sounds great. What are they used for? Well, stablecoins are great for trading. If you are trading every day, instead of selling your Bitcoin to USD and transferring money into your US, for example, or UK or whatever bank account, which can take several days and also requires a lot of verifications along with that, you can just sell your Bitcoin into USDT, which takes seconds, and you have an equivalent of dollar value in your crypto wallet, which you can spend straight away. So that's why USDT or stablecoins in general are very popular. A great concept for sure. The question is, how do you make sure that the value of the Tether, USDT, is exactly 1 US dollar? Well, there are different ways you can go about it, but right now if you go to USDT website, they say that 100% of USDT is backed up by their reserves. We will dig deep into their reserves in just a few moments, but for the time being, let's assume this is how it is. The question is, what seems to be the problem? Well, the problem is trust. And any company which deals in stablecoin space or in any space whatsoever, it's all about trust. If people don't trust it, people won't use it. Somehow, this company managed to win the trust of people despite numerous proven lies that they have been told. They have said. So let's have a look at the issues which started all the way at the time of their founding in 2014. Let's see what happened. It all started when the New York Attorney General decided to investigate Tether because it looked pretty shady. They were managing close to $2 billion back in 2017. Right now, it's $83 billion, which is insane, but we'll get to that in just a moment. So what did New York Attorney General found? What you need to know is that originally, up until literally, I think a year or two ago, Tether was the company which said that they have 1 US dollar for each Tether that they produce, which means if there is 1 million Tethers out there, USDTs, there should be $1 million in their bank account. That's their words, their promise. What Attorney General found is that in the period of 6 months, there was no registered bank account for Tether at all. None. Nowhere in the world. They didn't have any bank account to have the money in place. In this time, they have printed 400 million Tethers, which means that they have broken their promise. Next thing that was discovered is that all the money that Tether had at that time, that is 2017, were held in their lawyer's personal bank account. Sounds exciting. The problem is that in his bank account, there was no record of ever holding more than $60 million. That was May 2017. Remember that in the same period of time, Tether didn't have a bank account anywhere else in the world and has printed 400 million Tethers. But we're going deeper still. Next thing, Attorney General requested an audit of the audit. Next thing, Attorney General requested an audit of the company, which makes sense. You're managing $2 billion. Please make sure that you show us your books, as every other company is required to do in the world, pretty much, except the dodgy Bahamas and Cayman Islands and so on and so forth. But we'll get to that in a moment. So show us the books. The company failed miserably at producing any evidence and to pass the audit, and they settled on attestation. The difference is audit is in-depth analysis of a company's accounting. They look at where the money is coming from, where are they going, how much money they have, how they're managing them. The attestation is purely an accountant looking at your bank statement and saying, on this date, on this hour of this minute, you have this much money in your account. Well, guess what? They couldn't even do this right. Tether transferred $380 million into their account on the day of attestation to pass the verification, which they did because they had the money in their account. And guess who transferred the money to them? Bitfinex, which we will get to in just a few moments. It's all unraveling into something very, very interesting and exciting. Next thing, November the 1st, 2018, the Tether produces verification that they have money into their account, which were transferred literally on the day. And the next day, this money was starting to be sent back to Bitfinex. When the company was requested to comment why the money was transferred out basically straight away, they declined to answer. Obviously. Look, at this point, what I have to say is that I don't mind if a company tries to fuck over the government, lie to them, avoid taxes, do whatever they want to do, right? Not a problem. You do what you want to do. The question is, do not lie to the people that support you. So the company has for years told everyone, we have 1 USD for each Tether that we produce. They had 2 billion Tethers available at the time, and they couldn't show even 100 million, even 60 million, nothing. They could show nothing to support the reserve, to support this claim that they actually had the money to support the tokens that they were producing, which is a big blow to the reputation, if you ask me. And I think that's not fair that the company lies to the people that trust most in it, the cryptocurrency users, which is very disappointing. Next is more. Next up is juicy news. 2019 comes around and New York Attorney General definitively proves that Tether and Bitfinex commingled their money together to hide a loss of $850 million by Tether. Where did this money go? Nobody knows. Stolen, taken out to buy a yacht, I don't know. This is not Russia. At least you could find a yacht with Russian oligarchs. But this money goes, who knows? So 850 million gone. It has been shown that Bitfinex was giving their money, corporate money, to mix in with the client money of Tether. Bear in mind that when you deposit the money to Tether, this money should be kept separately from the operational money of the company. Clearly, that wasn't the case. And this is the case with traditional banks, but we'll speak about them in a minute because they're not as transparent as you think they should be. At around the same time, their lawyer has came out and confirmed that they only had 74% of the money backed, which means if they had $1 million of USDT on the market, they only had 740,000 US dollars. Troublesome, but they actually had at the time close to $2 billion, or I think even more than that. Furthermore, there were evidence that showed that Bitfinex and Tether colonginated or worked together to artificially pump the price of Bitcoin. Fantastic. How does this work? Well, one of the things that you should know is that the Tether's CEO, which has a very long and ridiculous name, I will call him Jean, and CFO, which is Giancarlo, are CEO and CFO, respectively, of Bitfinex. What a fucking surprise. They tried to hide it so hard, but in 2017, I think, or 19, a paper came out which disclosed the fact that they were actually linked, and then they couldn't deny it any longer. But they tried very, very hard to keep them separate. But you know, you can't really be a separate company if you have the same CEO and CFO. And clearly, some things will go dodgy. Perhaps not surprisingly, an academic paper came out which proved that as Bitcoin price was falling, new Tether was minted and used to buy Bitcoin to artificially pump the price up. Guess which exchange was doing that? Bitfinex. Obviously, who the f else if the CFO and CEO of the company that can buy these and produce these tokens is the same person? Obviously, they're together. That is pretty dodgy, but nothing out of the ordinary. People do that all the time, fair enough, whatever. Problem here is their reserves. So Tether is a company which always talks about how transparent they are and how hard they're working towards being the most transparent company out there. Well, it's fucking bullshit, because the only reason we get even a glimpse of what's happening behind the scenes is because New York Attorney General settled with this company, Tether, to produce quarterly reports of their reserves. If not for that, we would have not seen anything. So the problem here is that these accounting and reserve reports, confirmations, are done by a very small company based in Cayman Islands. Instead of a large company like JP Morgan doing an audit of the company or certifying that they actually have the reserves, they are using a very dodgy small, there's 5 people working in this company to do the analysis of their reserves. Bear in mind, they should have $83 billion worth of reserves, and 5 people doing this accounting work seems a little bit dodgy if you ask me. Let's go deeper and look at the actual reserves. Again, as part of their settlement with the New York Attorney General, who's the only person that forced this company to show anything at all, although they claim to be very transparent. As part of their settlement, they have to show that if any of the money that they're holding somewhere is somehow related to their affiliated companies like Bitfinex or any other shell companies that they could create. If we look at their report, the only option, the only percentage which is not linked officially to their affiliate companies is 5.27%, and that is it. All the rest of their money, I don't know if they are with affiliated companies or not, but they are not stating it, so it's pretty questionable. And it gets more interesting than that. Next thing that we see is that 75% of all of their reserves are in treasury bills and commercial paper, which are thought to be of very, very safe assets to hold. Fair enough, but there are 2 problems with this. The first problem is that if you claim to be an extremely transparent company, right, then what you should do is what JP Morgan does. And they're not particularly the most transparent company in the world, but even they show their assets and they say, look at us, look at our assets, we are holding these commercial papers. They write down everything, even the CUSIP, which is unique identification number assigned to every stock and registered bond in the United States and Canada. So you can know exactly how much money they're holding and the value of these commercial papers at any given point in time. What does Tether have? Nothing. They just say we hold commercial paper, it is 36% of our holdings. F off. So is this a problem? The answer is yes, for 2 reasons. Number 1 is that if they actually hold $25 billion in commercial papers, if it so happens that a lot of people decide to withdraw the money very quickly from USDT, they will have to sell those commercial papers. And if it also happens to be the time when other companies are selling their commercial papers, guess what? That will create a big issue on the commercial papers market, which is not good. The other problem is that 60% of all trades for Bitcoin is done in USDT, and about 40% of all DeFi is based on USDT, on Tether, which is a big problem. Thus, if Tether collapses, well, guess what? Everything else will start to fall like dominoes as well. And Tether is strongly linked with Bitcoin and the price of it. So as the price of Bitcoin falls below 20,000, that's the most optimistic estimate, then Tether will go past the point of no return and it will have to collapse to 0. Well, it looks like it. We don't know what's going to happen, but we'll see. Well, what does this have to do with Ponzi schemes and traditional banking? Well, let's figure out what Ponzi scheme is to start with. Ponzi scheme, not to be confused with pyramid scheme, it's different, look it up, is an investment fraud which basically pays the existing investors with money from new investors. And the only way that they could pay is if new investors keep giving money in. How is this related to Tether? Well, if you have 1 USDT and you put in $1 and then I put in $1 and get 1 USDT, if you decide to exchange, the only way USDT is transferred back to USD, to actual dollar, is that somebody else have to put that dollar in. Fair enough. And that actually works with a lot of cryptos, so keep that in mind. So if there are no reserves to fulfill this, then there is a problem. And the problem here is that if you print money, print USDT without the backing of USD or any other asset, then what happens if, for example, enough people want to withdraw the money into their actual USD, you don't have enough assets to support this. And then a hole is created. And the fact that they're not showing any books, if you can imagine 83 billion, for example, they maybe they have like 20% or 30% of this money, I don't know. Can you imagine $50 billion hole just appears in cryptocurrency? Who's going to pay for that? Well, all the people that are trading in USDT, of course, or holding their money in DeFi. That is surely a problem, but what it has to do with the traditional banks? Well, it turns out that traditional banks only require to keep 10% of your money. So basically, if I put $1,000 in a bank account, the bank can legally take 10%, put it aside, and then take $900 $100 and do whatever they want with them. Invest it or give it to other people as loans and earn anywhere between 2 and 50% on those money. The difference here between this and the Ponzi scheme is two. First, the banks are heavily regulated, which doesn't help sometimes, but fair enough. And two is that there is actually money there. So for example, if I put $500,000 in the bank account, the bank takes 50,000, puts it aside, and then it has 450,000 to play with. It then goes and gives 450,000 for a mortgage to a person, right? And the person pays back with interest, and I get like 0.11% of interest, whatever, right? So the bank shares something with me. If I come in and I say, I need my money back, the bank can request the money from the person who has the property. The person will sell the property and give the money back. This is actually what happened in 2008, is that the banks requested the money and people didn't have the money to pay it. The market crashed, the housing market, the house that cost 500,000 before now costs, roughly speaking, 100,000, and everyone is f***ed. So the same situation could happen here, but there are regulations in place to make sure that it doesn't happen, although I'm not confident that it won't. So there are quite a bit of similarities between actual banking system, the cryptocurrency, and the Ponzi scheme. Exciting stuff. So the difference here is the banks are regulated to some degree, but the cryptocurrency space isn't. And Tether actually doesn't have to give you the money back. That's why there is a problem with them having commercial papers that we don't know what they are. Because if you have $1 million in Tether, for example, instead of giving you $1 million back when everything goes to shit, they have the ability in their terms and conditions that they will give you a commercial paper or a bond instead. The question is, if this is a commercial paper for some Chinese company, which doesn't matter, doesn't exist, that will be a pretty big problem. That's why you want to know what commercial paper they're holding, especially if it's 30% of their reserves. The other thing you want to do is do your research. So maybe use another stablecoin like Gemini, which turns out to be one of the most transparent, actually transparent stablecoins out there. I'm not voting for it, but I encourage you to do your research and make sure that the company you're dealing with is transparent and can be trusted. Don't work with companies that lie to you day after day, year after year, and every opportunity they get, they hide things, not being transparent with you or honest with you. Same as with people. Thank you very much for watching this video. I hope you liked it. If you did, hit the like button, hit the subscribe button, and let me know in the comment section below what you think. I would love to hear your thoughts and tell me about your favorite stablecoin. Thank you very much, and I'll see you in the next one.
We gotta make them right, chillin' with mine. We triple up, they on a double up, triple dub. Came from the basement, we only going up. They loving us. Up in the booth, I'm getting dizzy, but they the cup is up. Toast to my people that's on the come up, and you live with us.